Dirty dealings, corporate battles, consumer woes. This is Evening 5. AME Elite Consortium is selling 11 plots of freehold land measuring over 34.91 acres in Pulai, Johor Bahru for 209.84 million cash to a Hong Kong-based data centre operator. In a BOS filing, the property developer said the plots of land are located in iTech Valley, a 170-acre industrial park at the Southern Industrial and Logistics Cluster to Digital Hyperspace Malaysia. DHM is a wholly owned subsidiary of Quantum DC Hong Kong, which primarily provides infrastructure for hosting and data processing services. The sale is subject to approvals from the Johor State Government Office and potentially other relevant authorities such as the Economic Planning Unit. The transaction is valuing the land at 138 per square foot on a willing buyer, willing seller basis. AME Elite estimated the company would lock in gross proceeds of 155.04 million from the land sale. The proceeds have been earmarked to fund development costs relating to iTech Valley, including land, infrastructure and construction, as well as future industrial property development and investment projects, including land acquisition and joint ventures. The proposed sale is expected to be completed by the first quarter of 2025. iTech Valley is AME Elite's latest ongoing industrial park development project with an estimated GDV of 1.5 billion spanning over 5 years. Trading of AME Elite securities had been suspended from 9 a.m. this morning and will resume on Tuesday. The counter last traded at RM1.78, giving it a market value of 1.14 billion ringgit. Tax incentives to attract investments into the finance sector in the Forest City Special Finance Zone are expected to be finalised by the end of May. Johor MB Dato' On Hafiz Ghazi said a proposal was submitted to the Finance Ministry at the Johor State Development Meeting chaired by Prime Minister Dato' Sri Anwar Ibrahim on April 18th. Banama quoted On Hafiz as saying that the state government has proposed the implementation of Forest City SVZ involving the banking and finance sector as well as domestic and international business services. He was replying to Andrew Chen Kaeng, PH Tulang, on the development of Forest City SVZ at the State Assembly at Kota Iskandar. On Hafiz said fiscal initiatives include corporate tax exemptions and special rates for approved economic activities, special income tax rates for high-skilled labour, and stamp duty waivers and a reduced rate for instruments of transfers for properties and shares. He added that non-fiscal incentives include policies related to visa and immigration services to further enhance ease of movement, especially involving the Malaysia and Singapore entry points. He said the SVZ development also involves infrastructure improvements, such as highways, public transportation and other facilities to improve accessibility and quality of life to benefit the local community. ONG services firm Dialog Group saw its third quarter net profit improve by 19% year-on-year to 156.2 million thanks to higher upstream output. However, revenue in contrast fell 13% year-on-year to 702.2 million from 802.8 million ringgit. Dialog declared an interim dividend of 1.5 cent per share. The group said that the general outlook of the oil market continues to see an improvement following disruption to demand caused by global events. Dialog said that it would continue to invest in phased capacity expansions for long-term customers across the midstream terminals business portfolio. In the downstream segment, Dialog said it will conduct thorough risk assessments for new projects and strategically pursue opportunities while being cautious and selective, particularly in the bidding process for lump sum engineering, procurement, construction and commissioning contracts. Dialog said its storage facilities for renewable fuel products with a capacity of 24,000 cubic meters under Dialog Terminal Langsat 3 are expected to commence operations by the end of 2024. Dialog is also investing 250 million to expand its fabrication facilities in Pengerang and is building its first specialty chemical plant producing malic acid in Kuantan, Pahang to expand its downstream business. Serendib Capital said on Monday that an agreement to rescue Sarawak Cable remains in force and cannot be terminated unilaterally. SCB's announcement last Friday of a strong alternative party keen on reviving the company was not discussed with any of the directors representing Serendib. The UK-based firm also said that it was not notified ahead of time as required. Serendib intends to fulfill all of its obligations under the Memorandum of Agreement in December 2023 with SAB, the firm stressed. Last Friday, Friday, SCB said it was unable to agree on a working relationship with Serendib amid a delay in proposing and implementing any debt settlement with the company's creditors under the MOA. SCB stopped short of saying that the agreement was terminated and only said that the termination of the MOA would not, in the company's view, have an impact on the company's Practice Note 17 regularization plan. This means the agreement has not been terminated and remains in force, according to Serendib, adding that this threat is now being attended to by Serendib's lawyers. Serendib stressed that it has put forward a transparent, credible plan that secures the future of the company after close to 5 months of negotiations with creditor banks of SCB. It should be pointed out that the largest shareholder of SCB is its chairman, Datuk Sri Mahmud Abu Bakar Taib, the second child of the late Tun Abdul Taib Mahmud, and he currently holds an 18.63% stake. Sarawak Energy also holds a 13.13% stake in SCB. Golden Screen Cinemas, which is operated by PPB Group, said on Monday that it will launch a new outlet in KL East Mall and close its outlet in the Central Square Shopping Centre in Sungai Petani, Kedah. GSC KL East will be open on May 20th with 8 halls, including an IMAX hall and the third play park in Malaysia, while GSC Central Sungai Petani will be closed by early June, with its resources at the latter redeployed to the GSC Aman Jaya Mall, which is less than 7 kilometres away. GSC said the strategic plans are to increase its market share in key locations and consolidate selected locations for operational efficiency. GSC CEO Komei Lee said that the cinema operator is dedicated to delivering unforgettable experiences that go beyond conventional norms. GSC operates the largest cinema chain in the country, with 520 screens at 55 locations in major cities nationwide. The business is housed under the Film Exhibition and Distribution segment of PPB, which contributed about 570 million or 10% of the group's revenue for FY 2023, according to its latest annual report. The segment, however, suffered a larger net loss of 120 million in FY 2023 compared with 17 million in FY 2022, mainly due to the impairment of cinema operations and assets. In March, the group said it was expecting a tough year ahead for its movie business as the strikes in Hollywood had affected the supply of content in the medium term. To offset the impact, GSC would be shifting its focus to local and regional movies, including participating in local film production. At the time, Co said GSC was working on co-producing local movies on profit sharing, with costs ranging between 8 and 20 million for each production.